Thank you very much, Chairman Barr. The both of you, have either one of you ever worked in a bank?
I have not.
When I was in college, I was a bank teller. Beyond that, I've never worked in a bank.
How would you know, each of you, what kind of impact local banks have on their communities? I think that's something you consider when you make your decisions. How do you have that insight? How do you gain that insight?
Well, sir, to your point, I have not worked at a bank. We certainly have people at the FDIC who have. We do have people at the FDIC with that type of expertise. And so I would say that staff that reviews an application reviews those statutory factors and weighs the application, if you will, against those statutory factors to take a look at those concerns.
I would agree and endorse everything that Mr. Anderson said. I would also elaborate on that a little bit to say that at the OCC, our core mission is bank examination, which means that we have examiners on the ground at banks, at the largest institutions.
Okay. Next question. Do your rules say anything about putting loans on non-accrual basis if the loan is greater than the appraisal of this collateral?
The current OCC notice of proposed rulemaking that is out for comment.
No, I'm not talking about the proposed rule. I want to know if your rules prohibit putting a loan on non-accrual simply because the collateral is lower than the loan.
I would have to look at the rule. Off the top of my head, I do not know the answer to that question.
Unfortunately, no do I. I would have to look at the rule as well.
Okay. So you wouldn't know if the regulators have ever violated that rule?
Again, I would have to look at the rules.
Sitting here and now, I don't have the information. I would need to answer that question, but I would be happy to have our staff engage with you and your staff, and I think that is a question that we could answer very quickly following this hearing. We just need to look at the rules.
Some OCC regulators in here sometime to find out how it really works, since the guys at the head of the agency don't know. Mr. Dodd, how does OCC account for increased competition from non-bank financial institutions like fintechs in assessing the competitiveness in bank mergers?
Thank you. It's a very good question. So going back to the statutory factors in the Bank Merger Act, so we have to consider the effect on competition. We have to consider the convenience of needs of the community served. So in that process, I think it's natural to look at not just what the landscape of the banking community is in a particular community, but also how financial services are delivered in general, both within that community and on a basis of scale throughout the United States. One of the things that our NPR addresses is the idea that we have these principles from 1985 with the Department of Justice about how bank mergers can be considered, and I think there is at least a recognition within the OCC that the landscape and the manner in which financial services in general and banking services in particular have been delivered since 1995 has evolved considerably, and we need to think about that, and that is part of what we're doing with our notice of proposed rulemaking.
Mr. Anderson, does your research suggest that larger banks have a greater or lesser capacity than smaller banks to diversify holdings to help reduce risk? And how's that addressed in your analysis?
I'm sorry, can you repeat the question?
Yeah. Does your research suggest that larger or smaller banks, larger banks have a greater or lesser capacity than smaller banks to diversify holdings to help reduce risk, obviously? And how is that discussed in your merger analysis?
I'm not certain that that's discussed in our merger analysis. I would say that's something that we would have to look into.
Thank you, Chairman. My time has expired.